guarantee, that is, the assets of depositors at those banks. As we await the president, we're going to go to Weijia Zhang, who is at the White House following all this as well. Weijia, good morning. What can we expect?
Good morning, Tony. Good morning to everybody. President Biden will try to reassure Americans that the banking system is safe, and here he is right now about to do just that. Let's take a listen.
Lee for California. I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risk of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you we will not stop at this. We'll do whatever is needed. On top of all of it, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term. Unemployment is below 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them, more than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors, protecting the banking system, protecting the economic gains we've made together for the American people. Thank you, and God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect? Do you expect other banks to fail, Mr. President?
That was President Joe Biden addressing the rescue of two failed banks over the weekend. The key phrase which he used twice was rest assured. He said that to all Americans, rest assured the banking system is secure and safe. And in particular, rest assured to the depositors of the Silicon Valley Bank and Signature Bank that they will have access to their funds starting today. Another key moment, he said, quote, no losses borne by taxpayers in supporting these two institutions. For more, let's go to Weijia Zhang, who was also listening in at the White House for us. Weijia, good morning again.
Good morning, Tony. You nailed it. President Biden really wanted to express calm, to make sure people did not panic and that there wasn't some sort of, mass exodus of people trying to pull their money out of their banking system because they were reacting to what happened here. And that is exactly why the president tried to reassure Americans many times during his remarks that the U.S. banking system is safe. To your point, he also wanted to stress that no taxpayer dollars would be at risk as a result of this. He said that those responsible, those working in the bank, will be fired if the federal government takes over, and that investors will not be protected. He said, sure, the people who were depositing money, this is not their fault, so they will be protected, but the investors will not. So, Tony, you did hear him walk away when he was asked the reason for all of this. Of course, that is what experts will be analyzing, especially with regard to the backdrop, which is inflation rates, as they continue to be an issue for the president here. Tony?
Yeah, the president taking no questions this morning, but Weijia, I know you'll have questions for him later. I want to go now to Errol Barnett, who is outside Silicon Valley Bank's headquarters in Santa Clara, California, where people are apparently taking a trust but verify approach, lining up already, waiting for this bank to open. Errol, good morning.
Tony, good morning to you. This bank won't open for another 4 hours, but this morning we've been speaking to customers of SVB who have been here for an hour already because they want to be sure they get access to some of their funds. Just take a look at some of the people lined up early here this morning. One of these companies is a digital imaging company that uses artificial intelligence, for example, to create images that hospitals can use. They are appreciative that the government is taking a dual approach in that the bank will be punished, but customers will get access to their funds. However, they don't feel as if they're out of the woods yet. These customers don't know how much money they will have access to and the amount of time it will take before they have all of their funds. And so they're nervous about payroll, they're nervous about future plans, but certainly relieved to hear they should have some of their money for now.
Nerves are understandable, Errol. Thank you very much. Understanding is another key here, and we've got CBS News business analyst, our financial expert, Jill Schlesinger. What stood out to you? What was the president trying to say?
I think this is a real moment where the past experience of 2008 gives a lot of information to the Fed, to the Treasury Department, and to the president. And the president is saying, everyone calm down. You're going to be made whole. Even if you had more than $250,000 on deposit at this bank, even if you were not entitled to FDIC insurance, we're going to make you whole. And I think the other aspect that was incredibly important was that he said the depositors are going to be saved. The banks, their shareholders and management, they will not be saved. That is very different than 2008. This is not a bailout. This is a rescue for depositors only.
Not a bailout, a rescue for depositors. There'll be political significance there as well. Also on the politics front, regulation came up in that speech. What kind of regulation?
Well, right now, when we came out of the 2008 crisis, remember that the government said banks have to have a certain amount of money on hand to meet their requirements that are basically beefed up liquidity and capital requirements. Small to medium-sized banks like Silicon Valley Bank lobbied to have those regulations reduced. This so-called tailoring went into effect in 2018 under the Trump administration. I suspect that that tailoring is going to be reversed under the Biden administration.
All right. One of the 20 biggest banks in America failed on Friday, and the administration moving today to cauterize that wound. We'll see if it works. Our coverage continues on CBS News streaming, your local news on this CBS station, and tonight on the CBS Evening News with Norah O'Donnell, which originates out of D.C. Many of you will now return to CBS Mornings. This has been a CBS News special report. I'm Tony DeCopel, CBS News, New York.
Well, you just saw the special report and the president speaking about the plans in place to secure the money that has been put in the Silicon Bank. I think that, when he said sorry, now I'm having kind of many things to think about. But the issue with this bank is that the primary customers were startups. And startups don't have a lot of money. They take their money in and out quite frequently. And so it's not like this is a bank that serviced me and you. Right. To that point, I want to bring in an owner of a startup. Let's bring in Alex Meshkin now. He is the co-founder and CEO of a healthcare startup called Flow Health. He's been unable to pay his employees because of his payroll provider is a client of the Silicon Valley Bank. So it's like a couple of degrees of separation there. Let us talk a little bit about your take on President Biden's remarks. He says that the money in that bank for the customers, that's going to be safe. For the investors, no such luck.
Yeah, so, obviously for the technology community, first of all, thanks for having me. For the technology community, this is a big win for the short term. Companies have access to their funds, they can make payroll and continue to operate. Our business actually didn't bank with Silicon Valley Bank. Just our payroll provider did. So we were very unfortunate to be caught up in this situation. Our employees were not able to be paid on time on Friday. We have resolved the situation, and by this morning, everyone will be paid, all 1,000 employees. But there's a lot of hidden risks for all different types of businesses beyond startups. We're a healthcare company. We are a medical lab that often has a lot of technology that enables our service. But, we're a critical service provider for many companies around the country, especially still in the COVID pandemic, and media companies like TV and film production rely on us every single day. And so having our employees be paid, we're a 24/7 operation, and being caught up in this bank failure is, unfortunate. But, I think the concern is Silicon Valley Bank is probably not the only bank to be facing a challenge right now in the overall environment.
But a lot of banks are scrambling to hope this doesn't happen in their wake. Alex, explain when you knew something was wrong that moment and what the response was from your employees.
So actually Thursday, I was very well aware of the Silicon Valley Bank situation, speaking with my financial institutions. On Friday morning, the head of my HR department calls me and, as like an FYI, says payroll is going to be delayed because Rippling, our payroll provider, has an operational issue with their bank. Immediately, I knew that it had to be connected to the Silicon Valley Bank. And so I had some very colorful words and said, we're in trouble. Our employees are not going to be paid today. And so we took a very proactive approach. I posted it to my personal Twitter. I notified all 1,000 employees at about 9 a.m. that they were most likely not going to be paid today because there's nothing we could do. We have the funds. We could double fund payroll. It's not a big deal for us financially. But there was no operational way of doing so. And so we wanted to be proactive, be transparent. And at the same time, our entire company mobilized to figure out how to solve the problem for the current payroll as well as for future payrolls. I'm pleased that Rippling came up with a solution. We put a lot of pressure through the media, and we appreciate the coverage and speaking directly to the company. And payroll started to be released Friday, Saturday, and this morning through their new banking partner at JP Morgan.
So you weren't a direct customer of Silicon Valley Bank, but the president kind of announced other things. He said that management was going to be fired, if the federal government had to sort of take over. I wonder, though, this bank had a very specific clientele, startups. It's kind of required if we're going to see innovation. We need sort of a banking setup that's going to take more risks than more traditional banks. Do you think that maybe, though, there needs to be a little more regulation? Silicon Valley Bank has been around for 40 years. As I understand it, it didn't do anything wrong, but it was sort of a bad series of circumstances. Not enough money, having to sell bonds, and then a run on the bank. Do you think it's time for the government to maybe offer a little more oversight when it comes to these sort of banks that are not your classic mainstream banks, if you will?
So, it's interesting. Silicon Valley Bank is a valuable partner in the technology and early stage, emerging market company community. And their business model, of course, extends credit and other services to higher risk businesses. And that inherently makes them, I think, a higher risk banking or financial institution. But that's not the reason why they failed this week. The reason why they failed this week was they had bought long-dated, treasury bonds, and they classified those assets as held to maturity, which didn't force them to write down the assets on their balance sheet. And so it had a hidden risk that most people wouldn't have been able to see. And I think that they're a canary in the coal mine to the broader financial system here, because commercial real estate is really the challenge that's going to face most regional banks around the country. And that's what worries me. So we look at Silicon Valley Bank, and, tech as a whole is, a target politically. And I don't think that's necessarily fair. The issue we have right now is inflation driving interest rates up, banks holding long-term treasuries at very low interest rates, and the mark-to-market risk is very large.
Alex, that was really insightful.
Very insightful. It's a complicated topic, I think, for all of us that aren't financial experts. And Alex, I hope if they haven't already been able to be paid, I hope your employees can be paid soon, because not a lot worse than not getting your paycheck.
Everyone will be paid today. So
great.
Perfect.
Alex, thank you so much.
Thanks for having me.
Michael Cohen is testifying before a New York City grand jury this morning. After the break, what this could mean for former President Donald Trump. You're streaming CBS News.
Hey there, welcome to The Uplift.
I thought she was a groom.